Hello everyone. Today's topic is on retention. So why retention or the term retention is quite important when it comes to the insurance industry in general. Why it is considered very important? Okay, let us look at the definitions of retention. So it is the maximum amount or the maximum portion of a potential claim which the insurer is prepared to pay on an individual risk, or is prepared to pay for a group of risks, or to prepare to pay for a loss accumulation on total claims burden given of a given portfolio within that 1 year. So it is actually the portion or the amount which the insurer is able to pay, meaning that if insurer is not able to pay as much claim as possible, they have limit. Okay, so it is like human being, we have limit. We can spend certain amount of money, we cannot buy everything in this world. The same goes with the insurer. They can only retain a claim up to a specified or a certain limit. It cannot go beyond that limit. Okay, so that is why retention is very important. So it is very important for the insurance company to set a limit for each of the claim depending on the type of insurance portfolio they are they are, I mean, it depends on the portfolio of the insurance that they are having. So meaning that motor insurance might have different limit, or property insurance might have different limit. um, in fact, life insurance too depends on different types of classes of insurance protection provided by the insurer. Insurance is a business to provide indemnity or payment on the occurrence of the contingency insured. So we know that it is about providing indemnity in the case of indemnity contract, or to provide a benefit, to pay benefit. Right? This is related, or providing benefit is about life insurance. Okay, so it's either to provide a benefit or to provide indemnity, depending on the contingency being insured. So we know that the occurrence of this claim it cannot predict. It is uncertain. It is unpredictable. Even the quantum or the amount of claim is also unpredictable. Insurer will never know how much is the actual claim that they have to pay. So the premium received by the insurer is based on certain expectation in regards to the claim cost. If actual claim costs more, the insurer will suffer financial loss. So that is why the main purpose of reinsurance is to control the financial cost of this variation in claim cost within a bearable limit. So reinsurance is helping the insurer to control the variation of claim cost within the limit of the insurer. So whatever the limit set by the insurer, whatever amount which exceed the limit is passed to the reinsurance company. Claim costs depend on two factors. Number one, it is about the frequency of loss or the occurrence of loss. So claim might occur once in a year. Claims might occur more than one time in a year. So the frequency of loss will depend the claim cost. And also the size of claim. The magnitude of loss will also influence the claim cost. It could be a minor claims or it could be a major claim. You never know. It's unpredictable. So the extent of variations in number of losses or frequency depend on the number of risks in the portfolio. So insurer cannot do anything to control this frequency. So what insurer can do is to control the cost of claim throughout their retention policy. They can control the claim cost, however, by setting the right retention level. So retention determines the amount of exposure to loss on a risk which insurer keeps for its own account. For the same extent of variation in number of claims, a lower retention will result in smaller variation in claim cost. If insurers set a small limit of retention for a particular portfolio, that will that will lead to smaller variation. Why smaller variation? Because they are retaining smaller amount. So a higher retention amount will definitely result in higher variation in claim cost. So when insurers set a high retention limit for a particular risk, that will also result in higher variation in future claim costs. So if the acceptable level of variation in claim cost is fixed, it will point to the right level of retention. But bear in mind, if insurer has a low retention policy for each and every risk, it will be able to control the variation in claim costs. Yeah, that is correct. That is right. Lower retention will result in lower variation. But what they will lose is the premium, the net premium income, the less asset that they can use for investment and lower profit for their shareholders. Okay, since if they can control the claim cost, they can control the variation of claim cost in the future by setting a low retention limit. But low retention limit will result in reduced premium because premium will be taken by a lot more, a big proportion of premium income will be taken by the reinsurer because they are passing the risk to the reinsurer for a bigger proportion that will result in also a loss of premium income. Even though with low retention, they can control the claim cost. But it is like you will win a certain aspect that the insurer will get benefit, but they have to trade off with some other things. They can control the claim, but they will lose the premium. So talking about retention, there are three types of retention, which is commonly used in the context of insurance. First, deductible. Deductible as a retention. So this term deductible, you will come across in non-proportional reinsurance. Okay, it doesn't matter whether it is working excess, or it is catastrophic excess, or it is stop loss ratio excess of loss. Those three types of non-proportional reinsurance are using deductible to indicate the loss retention of the insurer. So this is called deductible. Sometimes it is called priority, and sometimes in property insurance especially, it is called first loss retention. The second type of retention, which is commonly used, is sum insured retention. So in proportional reinsurance, the concept of sum insured retention are very obvious because the retention is based on the original contract. So what is retained by the insurer is based on the original sum insured of the original contract. And the insurer retention is normally calculated based on the sum insured. So let's say the sum insured is 1 million. Insurer, let's say, would like to retain 200,000, meaning that it's going to be 20% retention. So 80% is ceded to the reinsurer. Whatever the decision made by the insurer in proportional reinsurance is totally depending on the original sum insured. Okay, the third type of retention here is called EML. Okay, EML is also called estimated maximum loss or probability maximum loss, probable maximum loss. So EML retention doesn't look at sum insured as an indicator on how much to retain. So in the case of EML, insurer make their decision based on the maximum amount of potential loss for that particular risk. They are not looking at the gross sum insured. They are looking at a maximum amount of loss. If a loss occur, how much will be the maximum loss? So this EML thing depends on uh, too many factors. Okay, for example, let's say we have a risk of a tall building, a high-rise building. let's say the sum insured of that high-rise building is based on the value of the building. Let's say it is 10 million. So we know that if retention is based on the sum insured, insurer will have to make decision on that 10 million value of the building. But for example, if the high-rise building is a very sophisticated high-rise building with good loss prevention, loss mitigations method, that they are having everything in the building. There are loss sprinkler, automatic sprinkler. There are alarms everywhere. So in that case, since the insurer knows that the building is equipped with good and high-tech loss prevention gadgets, the possibility of total loss if there is a fire is not 100%. For example, if there is an alarm, it will manage it could man, it could the alarm should be able to detect the fire, so that will reduce the possibility of total loss. So EML, for example, let's say sum insured is 1 million. So possible estimated maximum loss in case of fire, let's say 500,000. Why it is not 100,000? Why it is not 1 million? Because there are factors taken into consideration by the insurer, such as fire prevention gadgets that the building is having. So EML will be 500,000. So decision how much to retain by the insurer depend on this EML. If let's say insurer would like to retain, let's say 20%. So 20% meaning that 0.2 times 500,000, 100,000. So reinsurer will take the balance of 400,000. So this is, for example, in proportional insurance, insurer retain 20% of this AML, 100,000, and reinsurer will get or will and the balance is ceded to the reinsurer for 400,000 or 80%. Or in the context of non-proportional, for example, if the EML is 500,000, insurer would like to retain 100,000, meaning that 400,000 is the cover. 400,000 is the cover, and insurer is retaining 100,000. So the concept of EML is used both in proportional reinsurance and in non-proportional reinsurance. So those are the three types of retention: deductible, sum-insured retention, and EML retention. So okay, we move to the factors which influence insurer decision on how much to retain. Number one is about the attitude of the insurer. So against insurer, decision of the insurer to retain depends on the decisions of the management. So the management can be conservative management, or they can be risk-taking management with risk-taking attitude. So if it is conservative, they are afraid of risk. Each risk will be retained in a smaller amount, conservative. If it is bold management with risk-taking attitude, they will decide to retain a higher level of amount for each and every risk. Again, the size of the company, number two. The size of the insurer has a direct relationship between the retention level and the size of the insurer. So talk about the size. The size of the insurer is measured in terms of the premium income and the capital of free reserve. Okay, talking about assets, the higher the assets the insurer, the higher the assets, the higher the insurer can retain the insurance, the risk. So assets of the insurer are made up of shareholder capital plus the free reserve. Free reserve means profit which is not given or which is not distributed to the shareholders. Free reserve is used for other purposes. Okay, so the rule of thumb here, retention in respect of assets should range between 1 to 5%. So the amount here, let's say the total of capital and free reserve is 5 million. Retention is only maximum 5% of that amount, or the least 1% of that amount. So okay, so it depends on the level of assets. So assets are made up of capital and free reserve. Okay, premium income volume also will indicate the size of the insurer. So premium income volume and the size of retention limit also has a direct relationship. Higher premium income or the larger premium income, that will result in higher retention limit for that particular risk. Okay, so the company must make sure, or the insurer must make sure that its retained loss should not exceed a specified proportion of the premium retained. So again, it could be between 1 to 5% of the premium income of that particular portfolio. So there are different percentage retained for different portfolio. Okay, for example, 1% is applicable for, let's say, property insurance, and 5% is applicable to let's say engineering insurance. So this rule of thumb is not similar, or it is not standardized across all insurance portfolio. Different insurance portfolio will have different rate of retention to the premium income. Okay, rates and premium loading. Again, retention depends on the rates of premium. Insurer will grade the retention limit based on the degree of risk as measured by the premium rate. So we know that a higher premium rates, okay, a higher premium rates, where is the symbol here? Okay, no symbol here. Higher rates indicates what? Higher rates indicate high risk. Why insurer is charging the insured with high premium rate? Because they know that the risk brought by the insured is a high risk in nature, so they have to charge more premium. Lower rate is for low risk. Okay, for example, if the building is a safe building, if the driver is a safe driver, he will be charged a lower premium because he's getting lower rate. So retention limit is inversely related to premium rate. It is inversely related. Lowest rate will result in higher retention, and higher rate will result in lower retention. So for the purpose of reinsurance, for example, if it is higher rates, that will result in lower retention when it comes to reinsurance. If the original rates in the original contract is a small rate, because of the low risk brought by the insured, when it comes to reinsurance, they will retain more sum insured. Okay, so it is the relationship between rates and retention is inverse, meaning that one going up and one going down. Okay, so what else? Okay, cost of reinsurance. So the purchase of reinsurance involves cost. It is not free. Remember, it is not free. So the higher the retention, the lower the cost. So claim experience will also affect the retention limit and the price of reinsurance. When it comes to, for example, in proportional reinsurance, the cost of reinsurance, when it comes to proportional reinsurance, depend on the net treaty result for that year. After taking into consideration and commission and recoveries, for example, the treaty result for the year 2020 will determine the cost of insurance for 2021. Okay, once the treaty result is released for the years 2020, insurer will get to know whether the cost of reinsurance they are paying for 2020 will be high or low, because this will reflect, the cost will be reflected in the following year, in 2021. If the cost is high, if the cost of reinsurance in proportional is high, in 2021 they will receive less commission, less rate of commission. Okay, less rate of commission occur because of a bad treaty result for the year 2020. So in 2021, they will get low commission, meaning that the cost is very high for the year 2020. If the cost of reinsurance is very low, meaning that the treaty result for the year 2020 is very good. So since the treaty result is very good, that will be reflected in the following year, and the insurer will receive more commission in the year 2021. So why high commission? Because the net treaty result for the year 2020, the prior year, is very good. So that indicates a low cost of reinsurance. So you can see the cost of reinsurance when it comes to proportional reinsurance depends on the net treaty result of the treaty between insurer and reinsurer. Okay, in non-proportional reinsurance, the lower the deductible chosen, the higher the charge, the premium, the reinsurance premium is charged to the insurer. So remember the formula for to calculate premium for non-proportional. So there is a burning cost calculation, or the burning cost formula. So there's going to be a loading factor. Okay. So in the case of non-proportional, if the insurer is retaining a lower level of risk, let's say the deductible level is very low, is very small, so that will result in a higher rate charged by the reinsurer, and this higher rate is reflected in the loading factor. A bigger loading factor is charged if the deductible is very low. So if the reinsurance cost is high, the retention will be high. So meaning that in non-proportional reinsurance, if the insurer knows that the loading factor going to be very high, if the reinsurer is to charge a high loading factor, the insurer will retain more, meaning that the deductible will be set higher. If the insurer knows that the loading factor charged by the reinsurer is going to be a small loading factor, then the insurer knows that the cost is very small. They will set a low retention limit. Okay, so that's how it works in in proportional reinsurance and in non-proportional reinsurance. Okay, next factor, the claim experience. So again, insurer depends on the claim ratio. Okay, if the claim ratio is very high, let's say previous year claim ratio shows a high ratio of claims, a high ratio between claims and premium income. If the ratio is high, the following year, the insurer will retain a smaller amount because they know that the possibility of future claim is going to be very high based on the previous year high ratio, high claim ratio. And also, if the insurer has limited claim experience, if the data is not available to the insurer when it comes to claim ratio, let's say the portfolio is a new portfolio, they have limited experience in that portfolio, insurer will retain less. They will retain smaller amount. Okay. Investment policy, number 6. Investment policy should be considered as the ability to pay future claims that use normal cash flow. Insurer need to maintain certain level of liquidity to ensure the ability to pay claim. Okay, meaning that to prepare to pay future claims, insurer need to have cash. Okay, this cash will be a good level of liquidity. If they want to retain more cash to pay future claim, there will be less money to invest for investment. So they cannot do a lot of investment if they want to have high level of liquidity. Okay, so the higher the retention limit, that insurer set for that risk, meaning that the retained claim, there will be the more liquid funds that the insurer will require, because they are setting high retention limit for that risk. They are prepared to pay more claims for that year. So that will require more liquidity. So meaning that, therefore, investment policy and retention are related. High retention limit will result in more liquid fund required by the insurer. So investment policy and retentions are very, very related. Retention going to be very high if the investment policy is low. If the investment policy, sorry, if the retention limit is very low, investment will be very high. Okay. Last factor is on market of reinsurance. So we know there are two types of market here: soft market and hard market. Soft market meaning there less capacity. Sorry, soft market meaning there is high capacity in the reinsurance market. There are a lot of reinsurer company able to provide protection when it comes to soft market. In the case of hard market, there are less reinsurance providers in the market, so that will result in low reinsurance capacity. So in soft market meaning that there are many reinsurance providers. Insurer will set low retention limit. Why low retention limit? Because they are over capacity. They can reinsure a lot in the situation of soft market. But in the case of hard market, less reinsurance providers, they're going to be less capacity and they have to, so the insurer will have to retain more for that particular risk. Okay, so soft market result in low retention limit. Hard reinsurance market will result in high retention limit. Okay, so those are the 7 factors which influence insurer retention policy. Okay, thank you very much.